What is PMI? PMI, private mortgage insurance. So a lot of people buying homes today, like there's certain things that people say and do that they say, I don't want PMI. This is bad. So first of all, what is it? Okay. So when you're buying a home and you're going with a conventional loan, if you put less than 20% down, the bank considers your loan a high-risk loan with less than 20% down. We can describe it 5,000 other ways, probably it's the way I describe it. So they take out an insurance policy such that if you default on your loan, then that insurance policy covers the top portion of their money. They don't get all of their money back, nothing like that at all. They get a small portion of their money back. So naturally, it makes it more, it incentivizes lending or allows us to lend to people who are putting less money down.
What?
So a lot of people say, like, I don't want PMI. PMI is bad. Well, why do people think it's bad? Simple. You're paying a monthly premium for something that you perceive as it doesn't help you any, which is wrong. And I'll get in that in a second. But ultimately, you're looking at it as, it's almost like you're watching me right now. State Farm insures my car. Let's just pretend my auto insurance is $50 a month. I'm completely making that up. I'm paying $50 a month to insure my car. PMI is like you, the person watching me, you are paying my $50 to State Farm to insure my car. So suddenly you're paying $50 a month to insure something that ultimately, if something happens to my car, you get absolutely no benefit from it. So you're paying $50 for nothing. That's how people kind of look at PMI.
So sad.
Like, it's just extra money the bank is charging me. This is where I say to people, not so fast, slow down a little bit. And the reason I say slow down a little bit is because people look at PMI as bad. It's extra payment. I look at it as that's the reason you were able to buy a home with less than 20% down. Let's do some simple math here. $100,000 purchase, 20% down is $20,000 down. Now you start going up into 200,000, 300,000, 400,000. On $200,000, 20% down is $40,000. On 300,000, 20% down is $60,000. Now all of a sudden you're starting to get a little bit of anxiety in you and feel that little choking feeling of like, oh my God, we're never gonna be able to afford a house. Okay, this is where PMI comes in. Go 3% down. Go conventional 3% down. Let's just pretend you're a first-time buyer, home ready, or whatever it all is. 3% of $100,000 is $3,000 versus 20% down, which is $20,000. Do you want to come up with $3,000 or do you want to come up with $20,000? Let's go up to a $300,000 purchase. You start moving into the median price of a home in the United States. It's probably like around $370,000, $380,000, $390,000. It was up to $420,000. You go up to like $400,000. But I'll forget four. Let's just use $300,000. 3% down on $300,000 is $9,000. 20% down on $300,000 is $60,000. The difference is $9,000 down versus $60,000 down. Okay, it's a $51,000 difference. The trade-off is your PMI. I'm guessing a little bit here. This isn't exact. Don't hold me to this. Your PMI is gonna be somewhere around let's just pretend it's $250 a month. I think that's overestimated, but let's just say it's $250 a month. So do you pay $250 per month to save from coming up with $51,000 more? And then, by the way, if you bought a home in 2019 or 20, only 3 to 4 years ago, you realistically probably have more than 20% equity in your home. So then you could refinance, get rid of the PMI. So the truth is you paid an extra $200 to $250 per month for 12 to 24 to 36 payments and then got rid of that versus having to come up with an additional $51,000 that quite honestly, you didn't even have, you don't have, you won't have, you'll never have, okay? I'm not gonna say you're never gonna have it, but it's gonna be a while, okay? Especially if you're a first-time home buyer. So this is the truth of PMI. People, they look at it as it's horrible the bank's charging me extra. I look at it and say, it's why you could even buy a home. Can you imagine that? Buying the biggest investment of your life, a $300,000 investment, but you only have to put up $9,000 to get there. And there's this insurance policy that will allow you to purchase a $300,000 investment while only coming up with $9,000. Let me know how bad that is. That is the brief story of PMI. Of course, you have to watch my other videos. I have other videos on government loans, USDA loans, VA loans, FHA loans, raising your credit score. Surf my page and check it out. I'm Khash Saghafi with Liberty Home Mortgage. Subscribe to my YouTube page. Share videos like this because not only does it help you, it helps other people. And especially if you're a real estate agent, you better be sharing these things. And we'll catch you on the next video.